So you're either going to be like go down in history of mortgage and lending as either the most hated guy in the industry or the most beloved guy in the industry, and it depends on what side of the fence you're on. Are you the consumer or are you the mortgage lender? And being a mortgage lender and seeing how people price deals out really shed some light on you as an originator to what the behind the scenes were on margin and that sort of thing that the consumer doesn't really understand. And it's like the industry's deep, dark secret that you're in a weird way exposing. So, Eddie, dude, thank you so much for being here today. It means a lot to me. You and I have been like following each other for so long, and I've been waiting to get you on this side of town. I keep joking, you're going to have to take a helicopter here. But Eddie Gomez is here with us today. So Eddie, thanks for being here, man.
No, thank you for having me. I've also been watching you and your podcast grow, and I love the story of breakthrough, right? Like when I really understood what breakthrough meant, and when you explained to me water boils at 212 degrees, I was like, what happened at 211 degrees, right? That really stuck to me, and that's ever since then I was like, all right, I really got to be there.
Dude, well, first off, yeah, that's it. I mean, the whole podcast was, what I realized is that everybody's social media was a flex.
Yeah.
And you and I joke about it, like, because you like nice shit, right? Like, and I like nice things, but nobody really talks about, the downside of being in this cycle. I mean, every LO right now is starving. Even if LOs are crushing it, they feel like they're starving right now. Yet, if you look at their social media, everything's great. And so it resonated with me because this idea of water boiling at 211, because what happened on the way up? What was the struggle that one had to go through in order to get to that breakthrough? There's a mind shift that happens where somebody says, my back's against the wall. I have to fight my way out of it, but I have to change my way of thinking in order to do that. I've done that. You've done that.
Yeah.
And a lot of people have many breakthroughs in life, but what really interests me about your story is this idea that you came up with. So real quickly, I'll give you a behind the scenes. I've been following you. You've been crushing it. I think I ran into you at the Forward event. You had your media guy with you. You were on top of the world at that time. Mm-hmm. And then you started buzzing. There was this buzz about this big event you were going to have. And, it was an invite only to this event, and it was this big event. I saw you post about it. And then I was like, well, you were going to do this big announcement. What was a big announcement? Yeah. I never heard the big announcement. And the big announcement was you were leaving the industry to go off and do this thing that's going to be tremendous help for the consumer in understanding pricing and margin, which is what nobody wants to talk about in mortgage. Right. And so that's almost like your breakthrough, but I don't want to take that away from you. I'm curious about your story, man. Let's start off with, let's talk about the way up, because
like 5 podcasts.
We have to start. Let's start with, first off, where are you from?
Okay. So I was born in Mexico.
Yeah.
I lived in Mexico until I was 9 years old, and then I moved to a small town outside of Hickory, North Carolina. There was like 3,000 people there.
Yes.
So I struggled, like everybody else. Like you move somewhere, like you don't know where you're going. I didn't choose to move there. I didn't speak English. And I get there, and it was hard. Like every other day I would come home from school crying. I would tell my parents, Mom, like I want to go back. Take me back to our comfortable life that we had in Mexico, because we actually lived pretty good. But they were always like, no, because only here you're going to be able to live a life and have the opportunity to live a life that you're not going to be able to live back in Mexico. So that word opportunity stuck with me ever since then, right? And so all of life, I am chasing opportunity. And then I learned that opportunity has this juice that you can squeeze, right? So I find opportunity, I squeeze the juice. I find opportunity, I squeeze the juice. And I get to this point in life, that 211 degree moment, I get to that point in life and I'm like, man, like there's only so much juice that I can squeeze on my own, but also there's only so much juice that I can drink by myself. And there's only so much juice that I can carry by myself. And at some point you're carrying all of that juice and it just starts weighing on you, right? And then you're like, you can't move anymore. And you have to share that juice with other people. You have to share that opportunity juice with other people in order for you to be able to continue moving forward in life. And so I found myself helping 200 to 300 families a year, every year. I started in the industry in 2011. I started in the bank on the stagecoach at Wells Fargo. And that stage
2011?
2011, yeah. And then that stagecoach by 2014-ish, I was 21. became a train. And so I jumped on the mortgage train, right? And ever since then, by 23 years old, I was the #1 bilingual mortgage banker at Wells Fargo nationwide. And so ever since then, I was helping a ton of families every single year. But I realized that I was living the same year over and over and over and over again. And there came a point where I was like, all right, I got to do something different. If I really want to go from helping thousands of people to helping millions of people, I have to build the next thing. I can't be on this train anymore. So I got off the train and I walked, right? And I'm building this new path and I'm building this new thing that nobody's ever done before, because nobody, I guess, has been either smart enough or stupid enough to leave millions of dollars of commissions behind, you know?
And you left millions of dollars of commissions behind. I mean, I think that has to resonate with people, because I introduced you to a guy in Miami.
Yeah.
And he heard what you were doing. We're going to talk in depth about it.
He thought I was bullshitting.
Well, he heard what you do. He's like, why did you invite this guy to the party, right? Like, why are we talking to this dude, right? He was like kind of annoyed. And then you kept talking to him, and he came back to me. He's like, dude, that guy left millions of dollars on the table to go and build this. And I said, well, I ran it, and it works. And, it's a good product to have. And it changed his mind on it, Right. And this is an originator who's a big originator in the country. And so I do think you have something that you're sitting on that's really important. But in order to do that, you left millions behind. So was that, culturally speaking, when you have to go to your wife and speak to her and say, hey, I'm gonna walk away from this lifestyle in order to create something else, is the conversation that you have to go the next few years and not starve, but we're going to live a different lifestyle until this gets up and running? Or what's that conversation like?
It should be.
Okay.
It should be that way. But the truth is that my wife's a baller too,
Is she working?
Yeah, I mean, not only does she work, but I'll give you a little background on her story. So we met before working at State Farm together. I was 19 years old, I think. So I left Wells Fargo for a little bit between 2011 and 2014, went to State Farm, and was the first person in all of State Farm's history to sell more than 100 policies in a month, right? Then she beat me. And when she beat me, I was like, all right, like, I'm not the top dog here anymore. Yes. I got to go, right? So she goes to when she graduates college, she goes back. Instead of going down a path where she could have been making a ton of money in the mortgage industry or really anywhere else, she goes and works with her parents. And her parents have a construction business that at this point doesn't have a way to measure how much it's costing them to take machinery out. Like, what does it cost to do a job? They're just kind of guesstimating at this point, right? And they've built a good business, but this business is built off of just hard work
and pure luck,
right? Yes, and pure luck. And so she goes in and she measures. Okay, this is how much it costs to take a machine out. This is how much our minimum job should be. And the company just grows and grows and grows and grows. And so obviously she's just this person that's also like mega successful, makes good money. So that together, right? Like, we're just like, all right, like, money's not really a thing, something that we have to worry about at this point.
That's amazing.
And we had the opportunity to build, to really build wealth throughout all of this time, right? We had an opportunity to do a lot of stuff together. We had an opportunity to travel the world. We had an opportunity to we have multiple rental properties. We really lived the life that we could. And
I mean, thinking about, not to interrupt you, but thinking about where you came from in when you were a kid and just moving here and looking at, going to school, English second language, you're struggling, you want to go back home, to now living this very successful life, right? So I think it's remarkable. And your word, man, is opportunity. Like, I think that transcends across everything that you've ever done, as you've taken every opportunity. And even this podcast is an opportunity for you to get your message out. You're prepared, you're poised about it, you're excited about it. And so that to me just shows the difference between successful people and not successful people. So I took you off track a little bit. I want to get back.
Good.
So go back to your 211 moment, like going in and realizing I'm walking away from millions, and you're going to now go down this path of creating your own business.
So it was really, so water boils at 212 degrees. Mm-hmm. It freezes at 32 degrees. Mm-hmm. When water boils, it turns into vapor. Right? It turns into a gas, it turns into a vapor. And more than anything, you're kind of like all over the place, right? I think I had more of a moment where like my water froze and I had an opportunity to become a solid ice cube, right? And really had an opportunity to use that to be that solid ice cube and like consolidate myself into like this peaceful moment. And when I found that peace was really when I realized that, man, like I can really do this. Like I can really go on and create something huge. And I'm not worried anymore about like money, or I'm not worried about like if I'm going to have to eat or not to eat, because I just had this faith that it is going to work. I have this faith that it's the next thing that's going to make an impact, a greater impact on a lot of people.
So you go and decide, I'm doing this. Mm-hmm. Well, where did the idea come from?
Somebody asked me, well, why don't you do that? Because I was talking about, so my co-founder, Diana, super smart engineer, she was at Microsoft at this point, like in January-ish of 2023, and she's buying a new build. And she's looking all over the place, like to look for the best interest rate, right? She's an engineer, like we all know those engineers, and having an engineer as a client, right? They're looking for the very best deal. They're looking at every single detail, every single number. And I'm like, Dana, just like take this loan estimate and like just give it to them and like have them match it, And so they do that. And I'm like, I'm doing this for so many people right now, because the truth is that we all sell the same exact thing. At the end of the day, every loan is sold to Fannie Mae, Freddie Mac, and Ginnie Mae. They pay the lender pays us or whatever. But at the end of the day, the money all comes from the same place. And so what I knew that that in order to run my team the way that I ran it, I was never going to be the cheapest. And the rate verifier also, by the way, this is for all lenders out there to know, the rate verifier is not the cheapest rate out there. It's not compared against the cheapest rate out there. It's compared against the fair market rate for that day. And that's based on an average of lenders nationwide and what they're offering on that specific day. But to take it back to Diana and what happened. So Diana comes to me. I tell her to go to the lender to request the loan estimate to be matched. They matched it, and I'm like, man, I'm doing this for so many people right now that I really want the best interest for them. I don't really want to sell them a more expensive loan than what they should be paying, and so I'm just helping them get the best deal. How can I charge money for this, right? Like, how can I create a business out of this, because this is what's really going to help people in the future.
Let me go back. I'm sorry to interrupt, because we've done this before. So our friends and our family are the hardest to do loans with.
Right.
Because you want what's best for them. Or the situation a little bit deeper than maybe. And, sometimes in order to run the team that you want to run, you're not going to be the cheapest. There are internet companies that will offer the lowest rate because their overhead is very different than what your overhead is. Or they're doing it in mass. You can look at the loan officer doing it. They've been in the business for 6 months. They may not know, but they have a better rate for whatever reason. But you're looking at this and you're talking to your friend who's an engineer, and whatever you give them, they're going to shop you.
Right.
Because that's how their brain works, right?
Exactly.
And so you see that, yes, I'll get you the loan, and then you're telling them, you can. It's like, you take this, and now I have a bench line that anybody can go beat.
Exactly.
Anyone can beat this, right? Mm-hmm. The darkest secret in mortgage. The truth of the matter, though, is like my wife and I have done probably 10 to 12 deals here at Loan Depot with a person that does employee loans. So we get a little bit of a better rate than, not by much, but it's a better rate. If I shop that, I'm sure I can get a better rate at Wells Fargo or, but I don't trust who's dealing. I know the person does my deal. They have all my docs. They know how to pull my stuff. They know how to get my paycheck stubs. They know how to do all that stuff because they work here and it's easy and I don't have to deal with it. And a lot of them are investment properties. So I'm like, whatever, right? I'm not really nickel and diming that piece. But if I shopped it hard enough with the amount of loans that we've done, maybe I would have gotten a better deal and maybe they would have done just as good a job, right? Maybe. I didn't want to take that chance. But for you, you're seeing it and you're seeing like, I'm making all this money helping all these people, but there's this subset of customers that are basically, I know when I give it to them, they're going to go shop me and they're going to get something better.
Right.
Did that wear on you? Like, is that wearing on you as an individual? Like, I'm losing all this business because I'm priced too high.
No, because I knew that I knew that my pricing was fair.
That's right. Yes.
And so I was confident in that the pricing that I had was fair and that it was helping the people that were my clients, right? But I knew that not everybody was my client. And I knew that there was people that didn't value that convenience, that did want to take the time to go and shop that somewhere else, right?
Well, but let's also say, and I'm sorry to interrupt, but there is this other piece that we haven't talked about, that you're dealing with the Spanish-speaking market. And not very many people who are listening to this may know this, but you know, a normal market, a normal customer that is, you know, W-2, you know, client that's making decent money, you can talk to 4 of them and one of them is going to close.
Right.
You talk to a Spanish-speaking client, you got to talk to almost 20 and maybe one of them will close because there's a long process to get their financials set up. So there's a lot of work that goes.
Yeah.
And so your team has to be big enough to sustain all of that input to get the little bit of output. But that little bit of output is yours forever because you've changed their life. You've helped them create generational wealth. All that stuff happens, but there's a cost to do business to do that differently than anybody else. So I think that's a big piece of where you're pricing and the amount of team that you have to do that.
I do. I recognize your point because it is very true. One of the things that I learned through my coaching experience is to never segment and to never only target one group of people. So my business was never more than 20% Hispanic business.
Oh, interesting.
Yeah.
Interesting.
Not because I didn't want to help, but because there was my business was set up in a way that, hey, this is the things that people need in order for us to be able to help them the right way, and we'll follow up. But I'll tell you a story about of how I learned this. As a loan officer, we're the pilot. We're not a mechanic of the plane. As the loan officer, if there's anything that any loan officer listening can learn today is that you're a pilot. You're not the mechanic of the plane. As a loan officer, if you are working on fixing the plane before you board it and pilot that plane to the next destination from point A to point B, you are costing for helping that one client fix their plane. You're hurting and you're costing every other client that you can just pilot from point A to point B, because to help that one client that you had to fix their plane, you could have taken like 20 trips. Does that make sense?
It makes 100%. But I do think that there are massive Hispanic realtor, or not even Hispanic, but just Spanish-speaking loan officers that would say, you know, but if I don't help them, no one will.
There is preparation. I think that one of the things that the biggest, outside of the rate verifier, I think that one of the things that the industry is lacking is mortgage preparation, like a mortgage preparation, whether it's a school or whether it's whatever it is, right?
That's a good point.
It's missing mortgage preparation from the actual thing, and people need to put value on that. And then we can break down how it is that people are compensated for the work that they're doing, right? The thing is, and let's talk about that first. If a client comes to us with a situation that is going to take 6 months to nurture in order to be able to purchase a home, and it takes a lot of manual effort because you have to. There just takes a lot of manual effort in order to get this deal done, right? You have the opportunity to collect income from that client one of 2 ways. You can increase your interest rates in order to get a higher compensation so that the client doesn't see that you're making that money, or you can charge a higher processing fee or a higher processing fee or application fee or whatever, and earn directly whatever that application fee into your branch, right? And so people choose to increase interest rates in order to have that person pay without really realizing it. And what ends up happening is you fix the plane, you get to the airport, and the client's like, hey, thank you for helping me these past 6 months, but your interest rate's so high that with you, I'm going to pay an extra $36,000 over the life of the loan. That's not worth it, right?
That's a good point.
And the thing is that loan officers are not making that extra $36,000. The lender's not making that extra $36,000. Fannie Mae and Freddie Mac are making that extra $36,000, but they're really only paying for that extra 0.5% interest rate or 0.25% interest rate. They're really only paying maybe another $2,000 or $3,000. You could sell your client the service fee of $3,000 for me having helped you these past 6 months, but you shouldn't be selling a higher interest rate that's gonna cost the client $36,000 over.
100% agree with that. Yeah.
And what the rate verifier does is it really basically reads the loan estimate, it measures it against the market, it says if this is fair or not, and based on the rate, and if the rate is fair, then move forward, right?
So we got to go into that. So okay, we got to talk about Rate Verifier. That's you're the brand, you build Rate Verifier to help the consumer, but I don't want to get off the topic because this is going to be so big, and I think that I want to spend a lot of time on that. But let's go back to the story. So you're coming up. There's an interesting thing that happens when you're in mortgage. There's almost a what's the word? A rite of passage to get to where the destination is of like this nirvana place where you have the best margin, the best amount of business to, sustain your lifestyle, and the best process, right? And so loan officers are looking for the best place, and it's like these clubs that open up. And, right now it'll be this club that's the best place to go, and then it's this club, it's like the best place to go. And and then all of a sudden, then it's like, actually, I don't want to be at a club. I'm just going to work for myself. And, and it's like an iteration. So you went from Wells Fargo, which is a bank, which is very strict in guidelines. And, they have a small box or a small window of people they want to help.
Right.
Yet, because they're so big, they help a lot of people. And then you moved from there and went into a non-bank lender and went to a couple of non-bank lenders and really made a name for yourself, top 1% in the country, and then went broker for a little bit?
No,
you never went broker, right?
Went broker.
And then you went to go build this, right? So in that process, what was it like for you looking at your deciding which companies you're going to go to and the checks they were writing or whatever that process was? Is that bonkers to you? Like how when you step out of the mortgage industry and look back at it, what is that like for you? What are your thoughts on it?
Yeah. I actually only switched. I only consider really three,
right?
Three companies that I was with. The first one, so when I was at Wells Fargo, I'd been ranked in the top 250 of NAREP for a while. So New American Funding had been reaching out to me forever. Patty and at the time, Frank Fuentes reached out to me directly, and I was like, all right, the owner of this company is reaching out to me, and like this big guy from the company is reaching out to me, and like I got no business, I have no distributed, we called it distributed at the time, but it was like I have no retail experience realistically, and they're willing to bring me in. Awesome, right? So I go work there, great company altogether, but my branch manager in Arizona left. And when my branch manager in Arizona left, I was like, all right, well, I need a branch manager. Like, who's the best branch manager there is? And I was committed to like bringing the best branch manager in Arizona to work at New American Funding. Like, that was my thing. Like,
that was your thing. That's just like, a different way that you think.
Yeah,
everybody's going to move.
Yeah. Like, who am I going to hire? Who am I going to hire? How am I going to bring in? And so Lizzie Hofer is the best loan officer in Arizona at the time. And I'm like, I'm going to go and bring Lizzie. And obviously she's a much better salesperson than I am, right? So she brings me to work with her. And I learned a ton from her, right? She made a lot of money from me.
But it was a great investment, and all of the money, every single penny that she earned from me is 100% worth it because the mentorship was amazing.
That's good, yeah.
And so I followed her to Guild and then to Cross Country. So in that umbrella, I was really just with her. I wasn't really with anyone else. And then when I decided to leave Cross Country, that was because I was ready to build the next thing. It was not to build the Rate Verifier at the time. I'm not gonna say the name of the other thing because that's still happening. But when I change the rate verifier, if to give a little bit of insight, the rate verifier is just a first product. It's not the end. It's not the end result.
Yeah.
Yeah. So the rate verifier is just the first product. It's not the end result. When I left cross country, I was wanting to work on the end result, and I realized that in order to get to the end result, I needed to first start with a product. And so what happened is it ended up being the rate verifier. That's now what's coming out first. But the reason why I left was because the new company that I went to, Premier Lending, amazing people as well. The two great owners, I worked with them directly, and they gave me a lot of really good insight into the business. I had an opportunity to create a contract that was beneficial for the company that I was going to be building, and that company was going to be 100% mine, versus if I try to do that at a big company, they say you use my resources or you use this or use that, So that's the reason why I made that change. I'm somebody that doesn't jump around. I'm not somebody that, I am somebody that recognizes that there's opportunity, but I'm somebody that before I do change or before I do anything, I try to negotiate with where I'm at, and I try to talk things out before I just make another decision.
Okay.
There's a good saying out there, if fool me once, shame on you, but fool me twice, shame on me. And so
Yes.
if you do get fooled twice, that's when you have to make a move, right, at the end of the day. But yeah, other than that, I mean, there's really not. I really haven't moved. I really didn't move that much.
But looking at it, so you get to Premiere, and then you're deciding you have these ideas swirling. Okay, so then let's jump into it, because I think that people need to know or should know that there's this this opportunity that consumers can use called Rate Verifier. So walk me through how it works, because when you first explained it to me,
I was confused too.
Well, it wasn't that it confused me. I didn't understand how to sell it,
right?
Because I'm a salesperson, right? So I'm thinking, how do I convince your worst critic, the loan officer, the retail loan officer,
right,
why they should use this, right? So, how do you make this your best friend, and or not, right? So that's why I say you could either be the most beloved person in the industry or the most hated, right?
Yeah.
Depending on how it is. But let's talk it through. So what is Rate Verifier?
So it double checks your mortgage rate and gives you an instant result for free as a client.
So I'm a client, and I just locked with my lender. And for those of you that are listening, most of the time, that if you're in a purchase transaction, that you're locking your loan is going to be right when you get purchase contract. That's usually where the clock starts ticking. I mean, you can play the market if you're smart enough. I wouldn't play the market in this market, but you just lock. And you lock your loan, and usually you're going to lock for around 30 days because that's a normal transaction. So at that point, I'm going to double check if I'm getting a good deal or if I'm being taken advantage of, because I have no frame of reference. Right. Yeah. The normal person has no, everything I see on Instagram is mortgage stuff, but that's not what the normal person sees.
Yeah.
So.
And there's a big problem, right? Because when you get pre-approved, you get one interest rate. And the moment you lock or you go under contract, you have a different interest rate with a different payment, and you're confused. Then you're like, man, I've already sent all my paperwork to this person. I don't want to start all over again.
Right? Oh, this is good. This is okay. Let's explain this because I remember a year ago talking about this, and I haven't talked about it since, but when we went into 2022 and we had prequals in our pipeline that were out shopping, then once those pre-calls got to June, about 50% of them weren't even qualified anymore.
Right.
And so the reason for that is because you start the process before you go into contract, and on a house that you like. And when you go on a contract, whatever rate you talked about before, the market's fluctuating. Yeah. The market's doing crazy.
The loan officer has no fault in there.
The loan officer has no fault.
Right.
But because you told me I was getting a 5, and now we're at 625, I got to shop you because that's sticker shock. Yep. That really impacted my payment. And I love you. Been talking to you for a month, 3 months. You worked out my credit, told me what I needed to do, and now I'm gonna shop you.
Yep.
And so that's heartbreaking for loan officers. But for the consumer, it's fair game, right? And so you give this consumer an opportunity to say, I've now locked my loan. Am I getting a decent rate? And to the LO's benefit, if they truly are giving fair rates, it's going to rate them well.
Exactly. Yep. And so your rate is fair, no further action required.
And I should use that to say, hey, look, by the way, like I got two options, right?
Yeah.
Let them go to the internet,
Yep.
which is going to have the lowest rates possible that may not even exist, or go to bankrate.com or something and get some bonkers rate. Or I can go to Rate Verifier, and it's going to tell me, yeah, I'm in good hands.
And show the client. Exactly. Show the client. Say, look, we're going to go to the rate within your inspection period. We're going to go to the rateverifier.com together. You're going to see that your rate is fair. And if it isn't, then I'm going to match whatever fair means on that specific day, right? Because also loan officers don't control pricing at the big level, so their margins could also be changing or whatever. But if their margins are changing, their manager or their manager's manager know that they're outside of the market that day and that they should get priced down to the number that we have at the Rate Verifier, because we get information from many lenders nationwide that are in the market that we're in the retail market.
Now, do you have a proprietary way that you pull that data? And so how do you know if it's real? And I'm going to give you a reason why I asked this question, because I subscribe to like a CoreLogic, data that tells me what everybody's priced in the market. But I'll look at that, talk to an LO and say, price me a deal at one of those companies is nowhere near what they're reporting.
Right.
So how do you know your information's real?
We validate it because we have, so there's three things that I have to say before I get into that. One, we're not a lender. We don't get paid by lenders. So the lenders that are on our platform are because they were invited because they're the best in their area.
Got it.
And they're not paying us for any leads that they're getting. And so they don't get very many leads because the Rate Verifier has 80 to 90% of the rate prescriptions that we give out matched by the lender that the client is already working with. So,
got it. So, okay, real quickly,
but whenever we do give a rate prescription to a client, it is guaranteed that if their lender doesn't match it, we have one of the best lenders in their area that will match it for them.
So that's an interesting topic. So you're saying that if I go to Rate Verifier and it says what are my degrees of
fair or high?
Fair or high, right? Yeah. Okay. Which is good, because if you can be like amazing, right? You got an amazing rate today. Right. So fair or high. So if I got a high, which is it red? Does it show up red? Okay. So it shows up red that it's high. I'm going to go to my lender and say, hey, this thing says you're high and I need to be around this area. And the lender is going to turn around and say, yeah, I'm not losing this deal. Right. I'm going to match you. So what happens to the thought process of why didn't you just offer me that to begin with?
Many times the loan officer doesn't have the ability to offer that at the beginning.
It's only until they're in a shopping situation and stuff like that. And that's what the consumer has to understand. Yeah. At that point, you're looking at, it's almost like when you're buying a car. You got to look at what did they pay for the car and what are they willing to make on the car. And so there is a different level of degrees. It is a funny story. I bought a truck, and then like a couple of days later, my dad bought a truck. And I forgot that one of my buddies was in finance. And, I never saw him or whatever in the transaction, but I'm out one night and I run into him and he's like, hey man, I saw that you and your dad bought a truck or bought trucks, like kind of matching trucks or whatever. And I'm like, yeah, dude, did I get a good deal? And he's like, and he paused for a second and said, do you think you got a good deal? I'm like, I mean, I think, what do I know? And he's like, then you got a good deal. Yeah. And then I was like, I wish I knew if I got a good deal or not. Like, he's not going to tell me I didn't get a good deal. I probably got hosed, but I don't know. But at the end of the day, it's all relative to what you believe is a good deal. And so if I just use this Rate Verifier to tell me, hey, you're in a fair place. And you
get the peace of mind.
You get the peace of mind.
Yeah, the client gets the peace of mind. And now they're not out shopping. So if your interest rate goes up, right, Chris, like, you go to a loan officer says your payment's going to be $1,500 a month, and it turns out to be $1,525. You're like, oh man, like this guy's screwing me. You automatically lose all confidence. But if the Rate Verifier tells you, hey, your $1,525 payment is actually fair in comparison to the market, now you're good.
So this should be your best friend.
Yeah, it should.
Unless you're so high commissioned that your pricing is so high that you're out of market.
Or you're telling clients that they're gonna get $1,500 payment when you know that it's really gonna be $1,700. They go on their contract, now it's $1,700, and now it's like, oh, like yeah, like you were screwing, you know. But there's not very many lenders out there like that. It doesn't. There are some, but there's not a ton of them. The reality is that like almost 50% of people are getting a fair market rate based on the rate verifier. And the other 90%, so almost 95% of people altogether, rates are either fair or the lender matches the rate that we told them to go and request.
So this is fun because I love data. But so you said over 50% are in a fair place. Yeah. Right. And then sorry, I forgot to go into. So when we talk about the data of what you pull from this, people are transacting every day using your rate verifier, but then you get to look at and extrapolate what's happening in the markets. Yeah. And so you see that over 50% of the people are already in a fair place, but the people that are high, how far are they high? Like, I want some data. Like, do you know who the worst offenders are?
It's about 0.25% in rate.
So in rate, okay.
In rate, yeah. So it's about $71 a month on the average loan, which turns out to be like $25,000 over the life of the loan. It's a lot of money, right? To pay one lender versus another giving you the same thing. For these $25,000, again, the lender isn't actually making that $25,000. All they need to give up from their commission technically is maybe $2,000 to $3,000. And it's not the loan officer giving that up, because once the loan officer has locked the loan, they can't give up their commission anymore, right?
Legally from a regulatory perspective, you can never take a commission away from a loan officer. So once it's locked, they're locked into their commission. Yep. They've earned it.
They can't switch the buckets anymore.
They can't. Yeah. Which I think it's frustrating, because as a P&L owner and somebody who manages a business, I always want to protect the loan officer, but then, there are loan officers who make mistakes, big mistakes, like just careless errors that could happen. And there's no penalty that you can give them. It's just like, we're going to eat it, right? Yeah. You eat it and it's just a cost of doing business. But going into the piece on there, so what loan officers are basically doing is they will go to their management team, and what they're going to do is they're going to erode the margin to get this person back into a fair price. Yeah. And then through that, if they're not willing to, the consumer comes back to you and says, hey, get me to somebody who can.
They plug in their rate prescription ID number to our website. It pulls up a list of lenders that are in their network, that are in their market, that are the top loan officers in their market, and they'll click connect, and they'll connect to that lender.
How many loan officers come to you asking you to be on that
list?
Okay, so how do you decide who's going to be on there?
We look their numbers up.
Okay. And what is your like, if I'm a consumer and I'm, basing what that I want to know that Eddie and team at Rate Verifier have done their due diligence with these loan officers, what are the requirements you use to consider that being on there?
They have to be doing at least 15 units a month.
Okay. That's a lot of units in this market.
Yeah.
So that's a big deal.
Yeah. It's a lot of units. And the reason why is because the average loan officer is doing between 1 and 2 deals a month. The average full-time loan officer in a good market, let's just call it, does between 1 and 2 deals a month. In my perspective, I never did 1 to 2 deals, right? Like in my perspective, a loan officer that is doing 1 to 2 deals a month needs to be involved in many more transactions in order to really be educated enough to deal with somebody through the largest financial milestone of their life. Somebody that does 10 times the business that the regular loan officer does is qualified to do that. And that is the only people that I would connect from the rate verifier to.
That's good. So where you're like, if you're looking at a heat map, where's your hottest markets of usage for Rate Verifier
so
today?
We've been in beta and we've only done marketing November, December. We skipped January. And in November and December, it was really all over the place.
Okay.
We targeted people that just had their credit triggered, their credit pulled. And so it was very, very targeted marketing.
Very much like, hey, I know you just pulled your credit. Do you want to try this free?
The only reason why a lender pays the $70 or however much credit reports are worth today is because somebody has a purchase contract. So it's everybody that we targeted is the right client.
Is the right client. And you're getting, what's the feedback you've gotten on the
So we had out of all of the people that we targeted, we had close to 900 people that got a rate that got a rate verification.
That's
that was
a lot.
high. Yeah, it was high. That was high.
Oh, that was high.
That was high. Yeah.
Okay.
Out of those, only 160 something people actually paid for the rate prescription. So the double checking your mortgage rate is free. So all of these 900 people got a free result that said that their interest rate was high. When we called these people and said, hey, like, we noticed that you didn't pay for the rate prescription, they were mad at their realtor because their realtor recommended them to the lender that they ultimately used. That
I knew someone's going to hate. I knew someone's hating you in this transaction.
So right now, so then what happens is I talked to the realtor. I explained like, hey, like this is
Oh, you get involved in that piece of it?
Yeah, like I was getting involved talking to these people because it's early feedback, right?
Yeah.
Like we've got to make sure like where it is that we're marketing, what it is that we're doing.
So smart, yeah.
And so the next batch of marketing that we're doing is going to be across the board, not only to those clients directly, because some of them was already kind of too late in the process. They were already outside of their inspection period or too late to switch lenders. Not because they couldn't switch lenders, but just because it was too late for them.
Oh yeah, that's a good point too. I'm in contract. I don't want to move. I'm stuck. Yeah,
I'm stuck. Right. And so those people had to make a decision. Like, do I want to save $25,000 or do I want to close on time? Right. Mm-hmm. And so it's
in a market like this, you starting over could impact your entire contract.
Yeah, 100%. And so, we're going to begin educating realtors early. We're going to begin educating loan officers and lenders early, and we're going to educate clients earlier in the process as well. That way, they know that everybody's on their side. The lender wants to make sure that they get their rate verified because they're giving fair interest rates. Ultimately, that's what we want, right? Like we want lenders to give fair interest rates. If we make absolutely no money from the rate verifier, that's good because again, it's just the first product in the grand thing that we're doing, right? Mm-hmm. And so we just want users. We just want people to really use the platform. Realtors to be able to confidently tell their client, "Hey, I'm on your side, and you're going to go to the lender that meets your needs, your timeline, your budget, and that you get the purchase power that you need to buy the house that you're looking to purchase." Don't worry about the interest rate at the pre-approval because at the end of the day, it's going to change between now and the time that you go under contract anyways. If it turns out to be high in comparison to the market, we're going to have a rate prescription that we're going to take to them. They're going to match it and we're going to get the deal that we want, right?
So the rate prescription, walk me through that process. What is that?
So people get a fair interest rate or a high interest rate result, right? Mm-hmm. And people have the opportunity to download a rate prescription for a fee.
So I pay the money, whatever that is, I get a prescription back that says what?
That tells you exactly what to request from your lender. Because what was happening, so out of these other 800 people basically that didn't pay, what we found out was they went back to the lender to negotiate a better rate, right? And the rate got dropped, but now all these points showed up on their loan estimate. And you see what I'm saying? So they didn't see the hidden cost that it took.
Oh, you want a lower rate? Sure, but I'm just going to charge you for it.
And if they had bought a rate prescription, they would have seen like exactly how many points they needed to request and all of that type of stuff.
Yeah, so this is so interesting, but points are the fees. It's a percentage of the fees that you're charged for certain things on a loan, right?
Yeah, so the cost to buy your interest rate down, essentially.
So if the interest rate today is, let's just say 6.99 at a 0 points, that means that you don't have to pay for that rate. That's what the rate is. But let's say you wanted a 6.75, then you could pay, I don't know, 25 basis points or 25, what is it, 0.25%, right?
So that people understand.
Yeah, you could pay to get that down a little bit. However, depending on what lender, that 6.99 rate could actually cost you a point with a different lender. And it's that you want to use a rate verifier to just double check to see if you're doing the right thing. Now, let's say the lender says, oh, you want to get that to 6.75. I'm just going to add 2 points to your fees.
Exactly.
And we see this a lot with internet lenders that you see a really decent rate and then you see like a crazy amount of fees being charged, like 30,000, you know.
Better.com.
Yeah, you'll see it on
Rocket Mortgage.
You'll see them, right? And so I don't want to call anybody out, but yeah, I mean, you see it all the time. I mean, one of my loan officers, she went viral on TikTok by showing, all she does is show LEs, you know, and she gets like 100,000 views on showing bad LEs, and which means it's prevalent in the market. So having, as a consumer, you know, what I look at is, would I want my mom using this if I wasn't available? And the answer is yes. I would want my mom to know whether she's getting a good or bad deal. And it would be cool if there was that for cars, you know? And like, so talk to me about the journey you've had in this process for you, like for you yourself going through it and reinventing your day-to-day. Like, what was it like when you got out of the industry? I think you still kind of have it swirling in the background, like you still have a team, right? Oh no, okay. So you got out, right? Yeah. Email's empty. What was that process like for you, man? Like to go through a disconnection of mindset and having to be on top of everything, and the constant anxiety and stress that comes along with being in a mortgage business, to this stopping and having zero. Was it glorious? Was it?
It was my Ice Cube moment.
That's it. Yeah.
It was the Ice Cube moment. It was the Ice Cube moment because I had to have faith in that piece, because nothing's happening. Like, you have to
do it.
You have to do it. But not only you have to do it, you have to realize that things aren't going to happen from one moment to the next, right? Like, we're so used to, okay, winning my day. I got these many leads. I closed these many deals. I did this and that. When you're building technology, you're working underground. You're literally working on building the foundation. You're in a basement. You're working underground. You're building a basement, and you're not seeing what the building's going to look like. Like, you're literally drawing the plans and doing the infrastructure and like doing all of this stuff. That's not very exciting at all. You can't even really go outside and talk to people, because one, they're not going to understand what the hell you're doing. Two, you don't even really know what the hell you're doing, because you know where you want to go, but you don't know what you're doing that specific day.
Where Rate Verifier starts as a concept will evolve, and you know, it'll evolve in 6 months from now.
Yes.
Right? To something, you know, better and different and all those things. But you know, like, but you're right when you say that you went underground, because you were just starting to like really hit it with your content. Like, you know, in fact, that's why I really wanted to get you on the podcast, because you're Latino, you're young, you're one of the up and coming 1%ers. You're doing all the right things. You have a marketing team, you know, you got this big team, you're fun, you're helping a lot of customers, you're at all the events. I'm like, I want to be in the room with this dude. Yeah. And then you disappeared overnight. Like,
I had
disappeared.
A big party for
you had a big
200 people party before I left. But
you did, but I honestly, I was so mad at you. Not mad. I really didn't lose sleep over it, but I was annoyed because I DM'd you. I'm like, well, what was the announcement? Like, you're like, well, you have to wait. I put it in my email. I'm like, I don't know. I checked my email. I didn't get an email from you. So I was like, well, all right. Well, he probably went broker or something, because that's what everybody does, right? Everybody at the time was trying to go broker, and then you disappeared, and then like, we hooked up in Miami. Yeah. And I don't know if I reached out or you reached out, but we started talking about Rate Verifier, and I didn't really understand the concept. And then we hooked up in Miami, and it was like, okay, now I understand this, and this could be a really cool thing. And so, but you disappeared. You almost had to go through that. And what was it like for you? Like, what on your personal life and being a man and a human being, and you know, I saw you on a plane with your beautiful kids, right, and beautiful family, and I was like, man, you know, like, I wonder what it's like to be able to, now you can shift that time, and just, what did you do differently with your, you know, what have you learned through this process?
I was able to gain control of my day, because when you're a loan officer, it feels like you're a business owner, but in reality, you're an employee to so many people. You're an employee to the client, you're an employee to the agent, you're an employee to the title company, to the appraiser, to the underwriter, to the processor, to all of these people, right? And so I got my day back, right? I got my day back to really choose what it is that I wanted to do. I found the right team first for the Rate Verifier, like the engineers, amazing people. And then whenever it was really time to like go underground and like really start building, I went to Mexico for 6 months.
Oh, did you?
Yeah. I was in Mexico for 6 months. I took my daughters to school out there, would wake up, I went to, there was like this pool by the house, like this, club, I guess, by the house. So would go to the club to swim before school, take them to school, go to the gym afterwards, have breakfast, have some meetings with the team, pick them up from school, hang out with them, take them to the ranch, chase chickens around, and we did that a lot for like 6 months.
Did you document this? I mean, is this something that like
I wish I had.
I mean, it would have been so amazing to see like the YouTube of just not knowing, but then when it comes to your back, right?
What happens? Yeah.
Yeah. So now, then you go into you come back right to the States.
So then I came back in December. Yeah. So I left July through December.
Got it. Okay. When did I run into you? And was it Miami?
September.
September.
Yeah.
Okay.
And so the reason why I was in Miami was because I was polishing my message. I wanted to go into a group of people.
I knew that. I knew that's why you were there.
Random people, right?
Smart.
That I can talk to. That I can talk.
Yeah, to test out what you're doing. Yeah,
test out the words. Like double check your mortgage rate wasn't a thing before.
And you did it the best place at a non-rep event that you were just running. But what was the feedback you got?
It was a lot of confrontation. It was very people took the rate verifier very defensively at the beginning, which is what I expected and which is what I wanted because I really needed to polish the message.
Today you did a phenomenal job with it.
To explain to people what it is and how it's going to help your business realistically, right? How it's going to help lenders, how it's going to help realtors, how it's going to help clients at the end of the day. And so I had to go out to people to do that. And so took the family out there, have a good time.
So what did you gain? I mean, like in terms of, getting your time back, you realizing that, we've been in this rat race and you've been, do you feel like you came out of the other side as a better version of yourself? Or do you actually kind of miss the chase? Do you miss the anxiety and because it's a weird thing. Like I think we could become addicted to all that comes along with the drama for the solve, right? It's like, blah, and then the solve, tears, emotion, everything. And then we got it done. We're the heroes of the day.
Right.
It's addictive, but do you miss that piece of it?
It is. I think that I'm in another chase now.
You traded it.
Yeah. It's another chase now. It's a much less comfortable chase for me, at least, like this one that I'm doing, because as a lender, did I close the deal? Did I not close the deal? Did I make money? Did I not make money? Right. With the rate verifier, it's something that I don't expect to make money. Right. It's all being just reinvest. And it's not at least not yet. We can't yet measure our growth until we reach certain milestones. Right. Right now it's really testing. It's really continuing to expose the message now, right? Like that's the next thing that we're going to be working on, exposing not only to the trigger people that just got their credit pulled, but also to lenders, realtors, clients, all over the place, get more feedback, and then next milestone and continuing to work through that.
Could a lender, Rocket, buy you and say, or partner with you and say, we want to offer you to every one of our customers?
They already have, not them specifically, but a lender's already offered me a lot of money.
And is that a conflict of interest from your perspective?
Yes, that's the reason why I'm not a lender.
Okay.
I couldn't tell people just from my heart, I couldn't tell you, Chris, your interest rate sucks. I'll give you a better one. It's not, to me, that's deceptive, and I've never been that person. And I feel like I'm doing something that is, again, it's just the rate verifier is just the first of a lot of things that are going to arise from it. You talked a little bit about it. You can verify your car. Rate verifier can shop your car for you and can do a whole bunch of insurance. It can do a whole bunch of other home services for you, right? So that you don't get screwed on all of these things. But the first,
is that the expansion?
You have to start with one thing, right? Yeah. It could go into that direction. We need to see the feedback and see what we have to master one first, and then we can figure out the next ones.
Well, it's smart because it's the whole reason the company that I work for, Loan Depot, is named Loan Depot, not a home loan depot or something like that, because we knew that we were going to eventually go into different home services and different loan types, that we wouldn't be, just one type. So it was you can come here for everything, but, we're still a young company. I think, 12 years old, 15 years old or something. But yeah, man, I think that, you know, what you're doing and being able to expand and really focusing, but first focusing and making sure that you can make an impact to the consumer is big. So for those of you who, you know, I really brushed through this, but, you know, those that are listening, Eddie Gomez is based out of Phoenix, Arizona, but I think you bounced back between here and Mexico, or it was just for that
It was just for that period of time, yeah.
Okay, so you are in Phoenix, Arizona, way on the west side. Like he's close to LA at this point. And no, I'm kidding, but no,
It's like Gilbert. It's like Gilbert on the west side.
Yeah, it's like yeah, exactly. It's Gilbert of the west side. But no, he's a remarkable individual, and follow him on Eddie 5G.
Eddie Gomez 5G.
Eddie Gomez 5G on Instagram. Be sure you follow him. But also, where do I find Rate Verifier?
The Rate Verifier.
Just go to the rateverifier.com.
Yeah.
Is there an Instagram page? Is there?
We do have an Instagram page, and we're going to start posting a lot more content.
Okay. And then, you know, what do you want people to know about you? Like what's one thing that you want people to know about doing business with you, and just, you know, what do you want to leave the world with?
I've always been committed to never winning at the cost of somebody else. And so anything that I do, including the Rate Verifier, I'm winning or I'm gaining only because of the value that I'm creating, and I'm just taking a small piece of that new value that I'm creating.
Dude, well, first off, you've always been a gentleman in every situation. I've watched you work rooms. I watch how people gravitate towards you. I watch how you have conversations with people, and you're very in tune to them. And I think that you have put in so much work to make this a thing in the industry, and could be a game changer in the industry. And I look at it and say, if I was an LO in a retail space right now and I'm sick and tired of getting shot my deals, let me start with sending my clients and control the narrative with them and saying, hey, run it by Rate Verifier first.
Yeah.
Because if you just go to the internet, anybody on the internet just wants to buy and sell your data to the highest bidder. And you're going to end up in the same place, right? So if you want a trusted third party that has nothing to do with the transaction, Rate Verifier is where you go.
America's favorite mortgage inspector.
There you go. There you go.
First and favorite.
I love it, man. Yeah. Well, look, I will say this. I think, you know, again, you know, I came into this thinking that you were either going to be the most hated man or the most beloved, but I think you have the best opportunity to become one of the most beloved people in, you know, the consumer space for lending. And I can't wait to see what you do with this, man.
I appreciate the time and the opportunity to be here, man.
Hell yeah, man. Congratulations on what you're doing.
I appreciate you.
Thank you, brother.